Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video guys, I want to make an update on what is happening in the global market, because you guys know that it's all related to what we can see happening in the meme stocks as well. So I want to make a big analysis on the S&P 500 tracker, SPY and QQQ. Let's get into it. Alright guys, so we're gonna use the tool that is working the best to analyze the SPY, the global market, the S&P 500 tracker. It's ELLIOTT wave counting, guys. So we are going here try to find the best counting and try to predict where we are in terms of waves development. So we are starting at the end of the COVID crisis, guys, in March 2 years ago, almost 1 year and 3 quarters. So we had first a massive rebound, guys, okay, starting from here. And of course, this rebound was happening in 5 waves, 1, 2, 3, 4, 5. All right, then we had a correction that lasts 2 months, A, B, C, easy. So we did 1, we did 2. Now it's gonna become a little bit more tricky. So bam, bam, bam. I have 2 countings, so you saw this is my best counting, guys. It's the one that is making the most sense to me. Then we start a new massive move up, all right? And to me, it happened like that: 1, 2, 3, 4, 5. Okay, you can see, guys, each time the ELLIOTT wave theory relies on the fact that you need to find the counting that is fitting the best, guys. Okay, and this counting that I'm having here is fitting very well, because motive waves develop in 5 waves, which each time the third wave being the most impulsive one, 1, 2, 3, 4, 5. Then here I can do the exact same thing, guys, 1, 2, 3, 4, 5, and then 4 and 1, 2, 3, 4, 5. So you can see this counting is fitting extremely well. All right, I won't do the same thing here, but I could 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. All right, so we have a counting that is verifying all the ELLIOTT wave rules, and that is giving us the top at 480 being the top of the third wave only. So we are heading for a fourth wave. And I told you guys, for those who are with me on Discord, I'm talking about this reversal since we are end of December, because we're having the signals of a reversal. The signals of a reversal is when you have the momentum going lower with the price action making higher highs. It's a bearish divergence. This is not always signaling a reversal, but most of the time it is. So just you need to be to pay attention to those momentum information. So here, then we had the breakout. All right, guys. So now the question we have, so we are correcting. All right. So what are we correcting? In this scenario, we are correcting the third wave. So first, let's try to give some targets for the third wave correction. So you guys know that you apply fibs to only the third wave, because this is what we are correcting, and we check the ratio. So the 38.2 is at 420. So we have already reached that. So this is telling me that maybe we have already reached the lowest level of this correction. If we didn't, then we might go to the 50 or 61.8% retracement level, which are at 400 and 380. All right, so keep those levels in mind, 400, 380. Then let's put some support levels on the downside. So once again, I check the previous lows, guys. This is how it's working. This is where you have liquidity, where you have buyers waiting. So here we had one at 427. I keep it, even if it was a bit, we went through but came back quickly. Next one is at 415 and 405. All right, so those are the support levels that we might go to in the A wave. And we know that 400 is the 50% retracement level. So 400 is a double level. So it makes sense for the end of this correction. Now, those corrections, they usually happen in 3 waves, A, B, C. So we have many scenarios, guys. So the first and most likely scenario is that we are in the A wave. So I'm not sure the A wave is complete or not. All right, we are below the 200-day moving average. So this is bearish, bears and control. We had a very bullish close on Friday, up 2.5%. But we closed above 440, which was a level, an important level, an important support resistance level. But we're below the 200-day moving average. So I don't know who is actually going to be leading on Monday, but if we have a bullish open and a bullish day on Monday and we close above the 200-day moving average and the 440 level, so let's say around 443, then most likely, guys, we're going to have a bullish week. So this is going to impact all the other stocks as well, AMC, GME included. So we're going to be watching that very carefully. Then in this case, let's say we have a bullish open, because this is what we're interested to know, what can happen next week. Then probably we would go to the 450 or maybe even the 460 level. So I don't know, 450, 460, the 460 level is the breakout level. So it's an important level to watch, guys. There's going to be a lot of sellers waiting there. So if we go there quickly, it would be rejected for like 80-90% of probability the first time. And I don't know how deep, guys. I'm not saying it's an easy trade. I'm just telling you that there is a strong resistance at 460. So let's see if we're able to go to those levels. If we do, then we once again have two scenarios. Either we are doing a B wave. This is the most likely scenario. So sorry, this was a B wave. So we do something like that, and then we have a C wave coming to the 400 level, guys. So be prepared for that. It's very likely that we see another leg down on the S&P 500, even if we have a rebound. The alternative scenario that is bearish is that we just go lower right away, guys, and we come back to those supports 415, 400 or 5. So I think it's a good idea to start to buy the dip on some big chips like Apple, Amazon, Google, you know, all those big companies, because they're gonna react very, very positively if we have a strong rebound on the S&P 500. So this is what I'm personally gonna be doing. I'm gonna be buying those stocks around those levels, okay? So yeah, alternative scenario, we go lower, then we have the B wave, and then if we go lower here, guys, maybe it's going to be the end of the correction, all right? If we go lower right away, maybe the ABC is like that, okay? So I don't know. It's too early to say. So we're going to need to know if, so basically the question we're having is, we're going to have a rebound sooner or later. Either we go lower and then rebound, or rebound right away. So the question we're having is it a B wave starting? Or is it a first wave starting? So to answer that question, we need to check the difference between a B wave, which is a corrective wave, and a first wave, which is an impulsive wave, a motive wave where buyers are very strong. So to answer that question, we're going to check in the past how it's usually happening, guys. And here we have an example. We have a B wave, and after we have a first wave, okay? B wave, A, B, C, first wave, 1, 2, 3, 4, 5. And let's check the differences between those two. So first here, I added the volume. You can see the volume involved in the B wave are lower than the volume involved in the first wave. So first, we're going to check if the volume on the S&P 500 on the SPY is very high or not in this rebound wave. If it is, it means that all buyers want to get back. It means the bullish sentiment is really back, guys. So this is going to be very good news for the global market if we see that. We're also going to need to see a very strong moves up, guys. Look here, it was gap up, gap up, gap up. Each time it was +2, and +2. The SPY in October 20 did 3 consecutive sessions of +2% opening, each time with the gap up, okay? We involving high volume. So if we see that, we can already use this information to say that we are probably in the first wave. And if we are in the first wave, it means the correction is done. Okay, this is unfortunately not my preferred scenario, but I'm giving you this scenario. And bam, bam, bam. And then we will probably go to the 600 level, all right, around July, maybe, maybe a little bit later, to know where the fifth wave might go, guys. We apply fibs, guys. It's working very well. We apply fibs here to 1 + 3, bottom of the fourth. Okay, so we don't know exactly where the bottom of the fourth would be, and the 61.8% retracement, fib projection. For the global market, for very impulsive stocks, you can go as high as the 1.618, but the 0.618 is the most likely one for the SPY, especially after having 1 + 3 so extended. So probably 580, all right, something like that, maybe in August, something like this, guys, okay? So this is the very bullish case. Unfortunately, it's not my preferred scenario. Like I said, guys, my preferred scenario is that we have an ABC, okay, something like that. So be careful, guys. This B wave is going to be very tricky. You're going to, it's not, I think, the right time to buy. Once again, we can compare the situation, guys, to what happened in 2016, because in 2016, we had a rate hike as well after a very strong bull market here between 2012 and 2015, guys. Rates were going lower. We had a massive quantitative easing, just like we have right now. I mean, the one we had in 2020, 2021 was much, much bigger. But then we can compare and look at that correction, guys. So that correction happened exactly the same way. So the first rate hike occurred in November 15, and you can see the market started to drop roughly 6 months before, guys. 3 months before. So the first rate hike is going to happen in March. So we are right now 3 months before. So we are basically here, guys. Okay, we are here. So what might very well happen, and you can see we have this trend line. It was exactly the same situation, the bearish divergence here, guys. This situation was exactly the same that the one we're having right now. Okay, so what we can expect, just look at the past, and we need to assume the same causes will create the same consequences. So we're probably gonna have a B wave, guys. That's gonna be tricky, guys, because if you were here in this trend, look, at that time, you would feel like, oh, we have, so I think we're here. So we're going to maybe have a bounce, maybe do an ABC, even like that. All right, guys, look at this ABC. Okay. And then you think here we have a rebound. You think that we are getting bullish again. But guys, this was a trap. All right. And then bam, the market just dropped heavily. Okay. So what I mean is that it took 6 months in 2015 to 2016. Right now it's been only 2 months. And I think we might have the first bounce of this correction, but this correction would probably happen, guys, exactly like it's happening all the time, doing some ABCs everywhere. So, you know, maybe an ABC like this, then an ABC like that, and finally one like that. Okay. So we might have something like this with a lot of ups and downs, with some fake outs on the upside, fake outs on the downside. So it's not going to be easy to trade, guys. So just be prepared for that. Don't buy high, buy low, guys. This is the environment where buying breakouts on the upside is not good. I love to buy breakouts, but I won't be doing it here. I would rather try to buy the dip and try to take profits early. So now QQQ, guys, I won't be doing the same analysis again. I'm just going to give you the equivalent levels. So we are in the same situation, guys. We broke out below 370. So, and right now we are just below the resistance level at 352. So if we close above 352 on Monday, we're probably going to have a bullish week that might go to the 365, 370 level, where we might see another leg down taking place. And last thing, guys, you need to be also prepared for the fact that maybe the scouting, I told you it's the best counting you can have right now, but you guys know that countings of when you use ELLIOTT wave theory and you apply countings is very subjective. And this is, to me, fitting very well. I mean, if one of you guys finds something better, come to Discord, show me what you have, but this is the best counting I can find. But let's assume that I'm wrong here, guys, that this is like that, okay, that we have a first, very shallow first wave, and that the fifth wave was here, that this is the third. Okay, it's possible, guys. Look, I did another counting. That is fitting, not as good, but at least fitting as well. And this would mean that we are correcting the entire move up, guys, that started in March, not only the third wave. So now we apply FIBs here, and we would at least go to the 38.2% of this move up, because correction needs to go to the 38.2% to be considered as corrections. So then it would give us a level of 380 on the SPY that we probably would reach in June or May, you know, April, something like that, guys. So just those are the levels. So 380, 400, 415. So anything below 400 is a massive buy to me, especially if it happens in the A wave, so that we can take profits in the B wave, guys. Then 460, 470 is a selling area, guys. This is an area where, I mean, I would be personally taking profits. And then we would probably have a massive, another leg down, and again, reloading at 380, guys, would be, if we have the opportunity to do that, a beautiful, beautiful trade, because then we would have another bullish cycle that would be starting. So that's it for me, guys. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.